It's unbelievable. We've rallied 100% since the 2008 lows as of today. It's just incredible. But the big story remains the same. There's a dearth of sellers out there, whether they're short sellers or people covering positions. And every pullback we see more buyers accumulating positions. Seems like that's been the story for the past 6 months, and there's nothing stopping it. No matter how bad the economic data is out there, the geopolitical events, every pullback, there's buyers down there.
And Larry, I suppose in terms of today's market performance, there are a few things to spur investors on. Obviously, those FOMC meetings, particularly the GDP upgrade. M&A activity continues, better than expected reports from Dell. Things, pretty positive for investors.
Yeah, and actually it started overnight when we had the Spanish GDP came out. Very, very strong, in line with most of the Eurozone, actually. Bank of England came out tempering their inflation expectations, and as you mentioned, Dell blew off the doors of even the most aggressive estimates, although their guidance is a little bit conservative going forward. GDP, PPI, housing starts, all came out very well today. PPI actually the strongest number since the end of '08. We're waiting to see what's going to happen with CPI, which comes out tomorrow, if that's going to exceed expectations. But the market wants to rally. It's the least path of resistance right now.
Look, it was interesting to note that in those FOMC minutes that inflation remains in check and so forth in terms of the medium, short and longer term outlook, I suppose. But speaking to other people on the street, it doesn't seem like that's the case at all when you start looking at food and gasoline prices.
Yeah, that's the funny thing. If you take out food and gasoline, there really is no inflation in the U.S., but that's been a big factor with commodity prices going through the roof. Oil is taking a little bit of a reprieve at $85 a barrel, but still oil's a lot. Gas is very expensive at the pump here in the U.S., so inflation is in check, which makes me believe that QE2 will remain in place because the inflation's in check. Nothing dramatic has taken place with the eco data. And until our housing market and our unemployment figures get better, they're going to keep that in place.
Hi, Larry. John Noonan from Thomson Reuters. You mentioned the price of oil at $85. Now, there's a bit of confusion in this part of the world what we should be using as the benchmark. You've got Brent crude blown out to almost a, $17 premium to what the NYMEX crude is quoted every day. We're getting reports here saying that maybe we should start using Brent as the benchmark because of a particular situation in the States that the refiners can't refine the oil fast enough that's coming down from Canada. What is the view in your market? Are we watching NYMEX or should we be watching Brent?
Well, traders don't follow Brent crude prices except if you're trading oil. But the average equity trader doesn't even know where Brent crude is trading. But people that buy gas for their cars should be looking at Brent crude because that's where the refinery comes from. That's where the inventory, which the numbers came out today, the inventories were much lower than they thought. So that premium is what we should be looking at and not the other oil prices.
Are you expecting to see, I suppose, the gap, the incredible gap that we're seeing between Brent and NYMEX to come in a little bit?
I don't think so. And the reason I don't think so is I think production is going to slow down because there is this perception that demand is going to tail off. At least that's what traders are saying. Therefore, when they take production down, it's going to just increase the price. And that seems to be embedded in the longer-term option volatility prices if you look at that. Gasoline right now, they think it's going to be stable, if not much higher.
Hi, Larry. John Noonan again. Just switching over to copper. We had an interesting day on Tuesday when during the Asian time zone, when the China CPI numbers came out, LME copper went up to a fresh all-time high and then had a nasty reversal lower during the Wednesday session, the Tuesday session, U.S. and came off again today, the last I looked. Are we seeing a little bit of a toppish action in copper prices and some of those base metals that have had such a huge run higher?
You know, what traders are telling me is that this is just a key technical reversal. I mean, some people are blaming it on China and the inflation figures coming out of there that's going to decrease the demand for copper. But really, we've had a huge run-up in copper. Any excuse to sell it is right now. And like you said, this is a 2-day extension sell-off, just a consolidation, a healthy consolidation. I'm still very bullish on copper the next 6 to 12 months.
Where can you see it going over that time period, Larry?
I'm sorry?
Where can you see copper going over that time period, that bullish sort of 6 to 12 months?
I can see it easily going up another 15% above the highs that we saw not too long ago, just based on the emerging markets and the fact that you just cannot ration demand. And the figures around the world are getting better. The economic data that we see, I can't see copper staying as low as it is today. I just would forget where it is and realize it's going to rally 15% from where we are today in the next 6 to 12 months.
And do you expect the prices of commodities to continue to trend upwards as long as we see the QE measure, the pumping of cash by the Fed into the US economy? Because a lot of the money outside of US stocks seems to be ending up in commodities.
Absolutely. And, you know, not many people in America are talking that way. But what you said, you hit the nail right on the head. QE2 is also inflating prices inflating the commodity prices, or at least it's lending towards the inflation of commodity prices. So I think there's going to be a QE3. I might be in a minority, but I think there's a good case to be made to be long or to own commodities.
Look, I was reading some of your notes this morning. Interesting one about the frustration developing among traders, thinking the tape would pull back more and, responding to some of this negative news. Set a new level to kick on from there, but it doesn't seem to be happening. Is there a sense of frustration and bewilderment at some of the continued strength and bullish run that we're seeing in US stocks?
Oh, absolutely. Look at the Mideast, the strife in the Mideast, and our own mess with our deficit and our spending, emerging markets, inflation, et cetera, et cetera, et cetera. Every pullback, it seems like there's strength, and it's very, very frustrating for traders. But another thing that needs to be told is that option volatility, or option skew they call it, the price people pay for downside protection is at an almost all-time high. So what that's saying is that traders are protected and waiting for a down move. That's a self-fulfilling prophecy. It never happens. We're going to keep rallying as long as put skew stays as high as it is.